what we know consistently is that software companies that embed payments into their solution almost always have better retention, lower churn than companies that don't. And so I've even done this within companies that I'm involved in, where we've done an analysis of all of their software, with all of their customers who have payments and who do not have payments attached. And because, of course, you never get 100%. It's very rare that you get 100% adoption amongst your client base. So it's a good way to map it out. And almost always we're seeing that retention is significantly higher when payments is attached than when it isn't. So we know, there's a couple of things that we know from that. And one of which is that the customers they're extracting more value from your overall solution, and they're less likely to leave because of the payment element, because they're not having to go out of the system to manage those transactions.
Andrew, this might be a stupid question, but does that inherently make winning the payments business harder? Because it's not like you just like rip out your payment processor, even if it sucks like willy-nilly overnight.
Oh yeah, it is. So payments is notoriously sticky. And so actually in my business, it's been several years since I sold the business, but we actually did an analysis of the average life of a payment customer. If you're direct with any of the big ones, so think Fiserv, WorldPay, Global, they're all pretty much the same now. But if you look at them, it's like, I think it's less than 2 years. You stay with the payment processor less than 2 years.
That's it?
That's it. If you are an embedded payment, my business, it was about 8 years, 7 to 8 years, our software companies and our merchants, because they're stickier. They actually don't want to leave because they're extracting more value. It's not a commodity. It's not just ripping out a point of sale machine. It's a lot more. There's a lot more. You can call it stickiness. You can call it value, depending on where you come from. But yeah, it's sizable, the difference that it makes if you're embedding payments. Now, counter to that, CJ, let me say, is that you could also say there's an argument that is it because it's another solution it's a bolt-on solution, a accretive solution to your software, and is there an element of that to it? Yeah, maybe. Maybe if you added another module or feature or set, then that may also improve churn. But to the extent that I've seen a lot of data across a lot of different companies, all evidence leads to the fact that adding payments, embedded payments, and I'm saying embedded specifically, as opposed to just a referral arrangement, then it significantly reduces churn.
I want to pull the string there. So can you unpack what embedded payments means?
So it's the function of integrating the payment process in your software so the user doesn't essentially have to go somewhere else to process the transaction.
So you're in the workflow that they were already in,
without them having to go anywhere else. And in most cases, without them even realizing that somebody else is actually facilitating the processing of the transaction. As in, if you are a software company, your users believe that you are the ones that are actually processing, and then settling the money into their bank account or their customer's bank account, as opposed to Stripe, Adyen, or whoever else. It's a completely embedded solution.
Run the Numbers is a mostly LLC production. Yelling an intro by Fat Joe. Artwork by some AI thingamajig. Podcast and video editing is done by Cleancast at cleancast.io. Nothing said on this podcast is intended to be business or investment advice. It's the sole opinion of me, a guy who feeds his dog too much ice cream and has a history of net operating losses, LOL. If you like this podcast, please hit subscribe. It would mean a lot to me. And also check out mostlymetrics.com. That's my newsletter where I explore business models and financial metrics. Thanks for riding with me. Share this with your friends. Peace.